Welcome. We're back for another run at this with these two great guys that I don't know if most of you remember. Probably 3 months ago now that we had a gathering, and people were asking for more. So what better way to do it than to get these guys back in the room?
Well, we're happy to be back.
Absolutely, yes.
So welcome, guys. Thank you again for agreeing to do this. And I'll turn it over to Reaza, who's our superstar moderator here, to keep things interesting as always.
I don't know about superstar, but I'm always happy to come in front of you guys and have a great, fun discussion usually, right? But with excellent information, I found.
Yeah.
Based on 3 months ago now, which seems quite a while now, right? It actually went by pretty quick. But based on me rewatching that and the information we talked about, it was incredible. And I know we had some interesting feedback and very, very good feedback from the people that were watching. So, Vince, thanks for joining us again.
Pleasure to be back.
George,
Yeah.
appreciate you having us as well. Why don't we talk about the hot topic, mortgage rates? Because they just seem to keep going down and down and down. And I want to know, do you think they're just going to continue, or what's your opinion on it? I want to start with George this time, if you don't mind.
Being a former Treasury guy, I think rates are way too low. It's actually creating problems. I think they're way too low. But let's face it, the world we live in today, I've been saying this for 10 years now. The world is addicted to low rates, and the governments of the world have been trying to raise rates for so long, but you can't. There's always that risk of going back into recession and stuff, right? But I think we've gone a little bit too far. So, a lot of the central banks are down at 0%. Some of them are negative around the world. And, the messaging that's coming straight from the central banks of the world, like, for example, the Federal Reserve, I've never heard them push a prediction so far out, saying that they're going to keep rates down till 2023, which is unbelievably a long term. And then the Bank of Canada followed with similar things. So I think that I think rates are here for a long time, but it's still worrisome, because to me, coming from a treasury risk management background, when risk increases, rates should too, because we gotta increase spreads when you're it's like B lending. When you're in the B lending space, right? You're lending to a technically a more risky person, so your rates are higher. Well, what I'm finding is that due to COVID and the global pandemic that we're having, there's no doubt in my mind that risk has increased, but yet I see rates coming down. And I absolutely think it's a little too much, because we might get a little more, too much stimulation of the housing market, which could be problems. But that's we can talk about that further.
Those are really good points.
Yeah.
The concern I have is, how much is the government influencing these rates? With all the stimulus, all the spending that has taken place in Canada, the government needs low rates in order to keep borrowing costs down to service the debt.
Right.
So, having been on a couple calls with some economists, the latest one with JP at Scotia, he indicated these low rates are probably going to be here for the next 3-4 years.
Yeah.
Right?
Wow.
In order to keep that debt borrowing costs in check, they have to be low. So, it does spur other problems, as George pointed out. I worry about inflation.
Yeah.
I don't know if fixed rates are even the way to go anymore. You may want to opt for a variable rate and not have the IRD penalty risk. We talked a little bit about that a couple days ago. So it's an interesting time. I think we're going to be seeing sub 2% rates for a while. It'll be interesting to see how the mortgage deferral impact, now that that's ended, see if people could get back on track with payments, see if delinquencies creep up. If they do, it brings in that risk premium that investors are going to want on a portfolio that may not be performing at optimum levels. So it'll be interesting to see where all this goes, but I think we're going to be seeing low rates for a while.
Agreed.
So you guys bring up a really interesting point, because we're talking about low rates. Most people associate in what we do low rates with borrowing for housing, but you're talking about servicing debt here and the impacts that brings as well. So George, from a global perspective, and I've asked this question of others, we're talking about the Canadian government here, but But what about the IMF? And do they have influences on what these central bankers do as well, from what you know?
I think most of the central banks are doing policies that are relevant to their own country, right? But we're all in the same boat. Like, unemployment's down, the economy's shut down. Like, how else do you stimulate the economy? It's through lower cost of borrowing. Lower rates means people are borrowing more than they should. But at the same time, they're taking that borrowed fund and stimulating the economy through spending, right? So I think that does, we're going to be talking a little bit about real estate, but these low rates, and I'm sure in Canada, are stimulating housing. And as we know, I'm pretty sure that housing accounts for about 30% of our GDP. When you talk about retail, contractor, all that stuff, it's 30%. And those are the jobs, a lot of these contractors are self-employed.
Right.
So with low rates, we're keeping them employed. And
right.
So low rates are a way of stimulating the economy, and it's creating jobs.
Well, when you're not making anything in your bank account, people see their savings as dead money. So they want to spend it or buy hard assets.
Right.
And that's what we're seeing. The smart money's going out and buying homes, buying cottages, buying, antiques and collectibles, art.
So assets in general.
Assets. And I was telling George just a while ago, the savings rate in Canada from quarter one to quarter two went from 5% to 28%.
Right.
Okay, the stimulus worked. It was more than enough. It gave everybody a lot of cash flow, and everybody's worried and they're hoarding their money, which is not a bad thing. So I think the deferral mortgage payments could be going back into an orderly fashion. I don't see a lot of problems there because of the savings rate going through the roof. It's the highest it's ever been since recorded.
Yes.
So that's positive because people are being smart.
Yep.
But I think it brings in other problems, and that is inflation. Values of homes are going to go through the roof. It's just bizarre.
Okay.
We'll see what happens.
So do you see on the flip side from the clients that you deal with, what are you seeing from a debt side of things with these clients that are coming to you? Is it increasing like it was at the rate it was before? I believe it was 1.78 was the ratio before. I believe that's come down.
Yeah, down to 1.5 and change.
1.5 around there. Have you seen any sort of shift there from what you're seeing with the applications?
Well, I think from a refinancing perspective, I think people are trying to better their situation. I think they're trying to get out of the high debt obligation products and into more reasonable interest rate products, being the mortgage product. The credit card limits aren't as high. The balances versus limits is as high a percentage as it used to be. I think that's positive, but people aren't spending. They're not in malls. As my dad said, he goes, all I see during the day are cars delivering food to everybody.
Yes.
People can't even go out. But, they say retail credit card activity's gone up in the last couple months. So people are going back to buying stuff, whether it's in a mall or online is yet to be seen. But I suspect that people are taking advantage of the online tools available to them.
So overall, you feel that we're, as individual consumers, we're in a fairly decent position then, debt to income, assets, and everything else.
Yeah, I always question that stat because they use credit bureau information,
right? And
a lot of that debt is jointly held. So there could be some overlap in the calculation. I can't imagine that it's an accurate figure. I think it's a rule of thumb. But I always use this example. Would you rather make $100,000 and have a mortgage for $178,000, where your debt to income ratio is 1.78, or would you be a tenant, a renter, making $100,000 with $75,000 in debt?
Yeah,
true. You got no asset, right?
That's true.
That ratio doesn't take into account the asset that's being leveraged
for sure
to calculate your debt ratio. So I know that it's a tool out there for economists to use as you assess a country's debt levels, but for the most part, I don't see it as a marker to assess net worth, and that's the big driver today.
Yeah, so just to piggyback on this, the answer that Vince just gave. So I think COVID-19, there's always, it's not a good thing. Nobody's enjoying it, but there's always some good things that come out of it. And the one thing is people are a lot more conscious of what they're spending.
Yes.
I can tell you, I'm spending about half of what I usually do. So that's helped, and you don't realize how much you're spending until you start seeing your bank account growing. And it's a nice feeling. So I think, you know, with the mortgage deferrals coming off, I think people are in a better position now. I got to think that the people who are not in a good position with this coming off have either sold or they've made other arrangements already. So, but you know what? I think we're going to be talking a little bit about the housing market and how it's.
Right.
So I think that this whole discussion of indebtedness is going to lead into other things for sure.
Well, it's a great segue because we were talking about this, and I think I position it. We're in a spring market, but in the fall of 2020, and you know, if you look at the housing sales up 42% year over year for September, it's, you'd never think it, right? Do you think it's here to stay?
You know, COVID has done an interesting thing with respect to real estate. Your home has now become a place where you live, you work, and you play, right? All in one. You can't go anywhere, so you might as well do something to your backyard. A lot of people are looking for a property where they could do all three things. So pools are more important today than ever. Before, they used to be a bad thing. No one wants a pool because it costs money to fill it. Everybody wants one now. Everybody wants to have workspace in their home so they could work from home, because more and more people are doing that. So people are looking for bigger homes. They're moving from condos to land-based properties. It's driving the market through the roof. And we talked a little bit about cottages. You know, I was involved in a transaction this week. Couldn't believe how much bidding there was. Lost out to a ridiculous offer because there's not enough of them. And everybody wants somewhere to go to, somewhere where they could spend some time because they can't travel. And I think that's going to be the case till 2022, maybe 2023, before people are going to be comfortable getting on a plane with a bunch of strangers going somewhere, breathing the same air. So that sparked it. And without the supply, people that are going to bid the most are going to get their homes. It's going to drive prices up.
So you see it as sticking around for a number of years?
I believe so.
George, what do you think?
Yeah, so my views on housing is this. I think, you know, when we talked about inflation, the governments are printing money like hell. And like anything in life, the more you have of something, it becomes less valuable, right? So there's big inflationary concerns regarding the money and the printing of money globally, not only in Canada, everywhere. And so it's interesting, you know, I believe that, you know, when people have a large sum of money sitting in their bank accounts, and a lot of the times it's earning 1% or less. And the inflation rate is generally at 2 to 2.5%. It's probably going to go higher with all the printing of this money. Leaving your money unutilized and in a bank account, you're actually getting poorer. And if people are starting to get educated, I know I try to do a lot of education. You know, when your inflation rate's higher than what you're earning on your money, you're getting poorer every year. And I think when people are starting to see this and understand this, they're going, what the hell am I doing? So what are they looking for? Something that's going to outperform the market. And they're looking for assets. You touched on it before. Those assets happen to be housing. And then when you get into housing and you realize what a house isn't just a place to live, sleep, and enjoy. A house is a place to build wealth. Like there's no other asset class in this entire country with a tax, you're at the lowest tax bracket, period. Every dollar your house grows, it's growing tax-free. Every dollar you make at work, it's going half into the government. Now, people are starting to figure this out. So people are looking for assets, which is a house. And in Toronto, GTA, it's extremely important why it's growing even more. It's because of the, you know, the supply and demand imbalance in the GTA. There's not enough supply. COVID or no COVID, we don't have enough supply. So that's driving homes.
And the opposite could be said about the condo market, because there's too much of them in the current environment.
Currently, and more coming.
You got no Airbnb.
Right.
You have no foreign students coming because of online learning.
The lack of business travel.
And immigration has basically come to a
stop.
halt because of COVID. Government's committed to getting back on track, hitting the immigration targets, which is good. So that'll come back.
Yeah,
I think
will.
the foreign students will come back. And I think the condo market's on a pause right now. It's everybody's trying to figure it out. So if you have the sustainability to keep on making your payments if your unit's empty,
Yeah.
you will be okay if you could ride it out. But if you're going to sell in this market where you're competing against another 50 units in the same block, it's going to be difficult. You're going to take a haircut.
And this is perfect because we want to lead into, sales are going up, prices are going up. What are you seeing with respects to the land base, so your detached properties versus the condos?
Yeah.
George, I know you have thoughts on condos versus homes as well.
I spent a lot of time in the condo market, and is it going through a little slump right now? Absolutely. But the one thing I really like to explain to people is that let's take pre-COVID. Okay, pre-COVID, there's no doubt in my mind, the supply is not enough to service the demand here. The reason why people buy condos is because they can't afford homes. The reason why people rent is because they can't afford to buy. Okay, so pre-COVID, I can tell you right now, the affordability in the GTA was shrinking. The ability to buy a house was getting harder and harder and harder. Now I look at COVID and what's happened since COVID, and I can tell you, the middle class and the poor have gotten poorer, and the rich have gotten richer. So if that's the case, affordability is even worse than it was pre-COVID. Why in the hell are people buying? It baffles me. So when I tell people...
It seems a little upside down.
It's a little upside down, but that's what pandemics do. They throw fundamental relationships that are normally 100% in line or positively correlated into something that's not right. So when I look at today's market, and I look at condos and stuff, the condo market, if you guys go downtown, most of the people, like in the downtown Toronto condo core, when I go downtown and I study the people walking out of those buildings, you very rarely find someone over 35 years old. And I can tell you right now, not one of them is scared of COVID. The only thing that's causing movement right now is that they're getting rents cheaper, and kids don't care about moving, so they're moving to another condo because it's cheaper. Affordability is going to make them rent permanently. That market is in a temporary lull. And I'm telling people right now, when the market's in a temporary lull, nobody wants to buy. When that rental to price appreciation of condos comes back in line, you missed the boat. The condo market, you go anywhere in this world, any major city, whether it's Hong Kong, the UK, New York City, anywhere, the condo market is alive and it will never disappear. I think it's a great opportunity for condos. I do.
Because it's in the lull.
And you're getting it at a better price. But everybody wants it when everything's aligned. It's too late.
Okay.
So I personally think there's a good opportunity out there in the condo market.
So you're seeing a very low rent to value ratio.
Yep.
And people are afraid of that because they want that backstop
That's
just in
right.
case they want to rent it up. But
Short-sighted.
going back to my point, if you have the sustainability, now's the time to buy.
Absolutely.
Yes.
Yes.
Yeah.
Because I'm looking at...
And you may have the pick of locations right now.
Yes.
Right? So
You
you
got
may have an
choice.
opportunity to pick up some really good units.
Yeah. So I looked
very
at
good
a place that usually rented for $3,000, maybe it's going for $25 now. So you're giving up $500 a month. That's only $6,000 a year. Most people I know is, my age with RSPs, they've lost $60,000 in a day.
Yeah.
So there's nothing that's escaped the impact of COVID, right? So, but I think housing in Toronto it's very strong. Now is the time to buy. I do. I think so.
So do you focus more, and Vince, I want to circle back around to you with that, but we're talking really Toronto proper. What do you see outside of Toronto? What's happening? Are there more condos going up? Are there more homes being built? What's really happening?
You're also seeing, as you're seeing this movement of people fleeing high-rise condos to land-based homes, you're starting to see this let's drive until I qualify mentality, and people are moving to the burbs.
Yeah.
Car sales have skyrocketed. right? People don't want to use transit anymore.
No.
So when the market does come back and people are moving back into the city because they got to go back to work, are people going to be happy with the commute and sitting in a traffic jam again? I think that that's going to be very frustrating for people. But right now, a long drive's not a problem because it's traffic free to a degree.
To a degree, that's
so it's
right.
going to be interesting to see how that works. But we're seeing certain pockets in 905 and the outskirts do very well. Anything along the 407 and major arteries are doing extremely well. I talk to Tribute a lot because they do our weekly TV show with us, and they're seeing some of these rural communities that they're building sell out.
Oh yeah.
Right? Out my way, yeah. In the east.
So I think it's all good, but then as George mentioned, when things get back to a new normal and people have to commute, how's that going to go?
Yeah.
Because that's going to be an eye-opener.
So let's touch on that a little bit before we move on. More and more people have realized that they actually have no issues working from home, where they used to go into an office 9 to 5, 5 days a week. More and more employers are realizing there's a benefit to have people work from home as well. So with that said, where do you see that going in 1, 2, 3 years down the road? Will we see that flood back into the downtown core?
I think that's a really great question.
Yeah.
Because what COVID has done is it's put less pressure on productivity and more emphasis on safety.
It has?
Yes.
If employers are going to continue this trend of allowing people to work from home, there's going to be a point where they're going to up the ante. And they're going to expect a little bit more accountability. They're going to expect to hit certain ratios and certain sales targets or whatever industry you're in.
Yes.
And they might use some tools to make sure you're doing what you say you're doing. Right? Because I know from what I hear, a lot of people are putting in half days, maybe 65, 70% days because of COVID. And COVID has this built-in expectation that, hey, safety first. Health first.
That's an excellent point.
And no one's talking about that. So a new norm of working from home is going to look a lot different post-COVID than it is right now.
I believe.
Yeah, so I spoke to one of my friends, and he works in commercial mortgages, and he made an amazing point the other day, and he says that they had a meeting with many CEOs, many top leaders from the many different industries, and they asked, what's the biggest impact of COVID on all your businesses? And the number one answer was, their number one concern was the lack of productivity. But it's acceptable now because it's COVID, like Vince said. But if it's the number one concern, they got to get people back to work, because I'm telling you right now, I've seen people, there's very few really good workers out there that even when you're monitoring them, they're not even performing. Can you imagine a lot of people? I can tell you right now, I have people in my life that I'm calling in the middle of the day and go, can I call you back? I'm in the middle of cutting the grass. Like, come on. Right? And it's very normal.
But there's a built-in expectation that 2020 is a write-off.
Yes, it is.
Right?
But not going forward.
So that's the built-in expectation. For those that outperform, that's not the expectation.
Right.
Everybody I talk to that's in business, it says, you know what, we're doing pretty good. We're at last year's levels, and we're static.
And they're okay with that.
Yeah.
Okay. Well, you weren't really impacted by COVID. As a matter of fact, you should be at a benefit.
Yep.
Because your world doesn't correlate to anything that is socially distant or whatever.
Yep.
So why are you happy with just being flat? And they looked at me and it's like, actually, you make a good point. It's because productivity is down.
Yes.
Right? And it's something that's not talked about a lot. I think we're going to see more and more discussions in the fourth quarter and leading into 2021 about it, and we'll see where it takes us.
Well, now when you think about it, this time of year, whether it's October, November, and definitely December, it's business planning quarter for next year. And how is next year going to look? What are the expectations based on the current environments, right? So let's touch on this. People are buying like crazy. I've never seen this. Well, we have seen this frenzy, but not during a pandemic. Right? If you think back, people are buying like crazy. Why are people able to buy, and why are they actually thinking this is a great thing to do in the middle of a pandemic?
Yeah, a couple things. I kind of mentioned, I'm sure Vince has his thoughts too, but I kind of mentioned before that if affordability is down, how is it that so many people are buying? And I have to rack my brain around this over and over and over. And the first thing I think about is a lot of people who migrate from condos, for example, naturally because they're having kids and moving to the burbs. I would say pre-COVID, they wanted to keep the condo and buy the house.
Yeah.
Okay.
That's not happening anymore. Because affordability dropped, they're actually selling the condo to buy the house. So that's actually contributing to some more condos happening on the market, right?
Yes.
But I started looking at my guys. I have a lot of guys buying first-time home buyers. Okay. There's a lot of help from parents because the parents know how hard it is. And if they don't buy now, they're never going to get in. Again, it's an affordability issue. So people are getting help. But I noticed that a lot of the kids who are educated have good jobs. Two couples come together, they got $75,000 each. It's 150 household income. You can get a decent mortgage. The one thing they don't have is down payment.
That's
so the bank of mother
thing.
is happening. I see it.
We're also seeing a lot of families split by this.
Yeah.
We're seeing a lot of marital breakups.
Yes.
People are selling bigger homes, buying two smaller ones, or vice versa. The pandemic has created a lot of stress for families, and especially those experiencing job loss or income interruption. I always joke that couples in the best of times don't communicate very well.
Yes.
When things are stressed financially,
It's worse.
it's worse, and it creates a lot of cracks, and it ends in marital breakups, and people need to sell. They have to buy two properties or whatever the case is, and it adds another dynamic to the marketplace, which
that's
no
what I
one
was
really
going to
talks
say,
about.
because you're traditionally you're selling one, buying one. We're in an environment where you're selling one, buying two. So just to piggyback and finish off this one topic. Now we're talking about how are people doing, how are people buying, especially the younger people. And George, you mentioned the bank of mom and dad. Right? But when you say the bank of mom and dad, we're also seeing a bit of a trend nowadays, because before, mom and dad used to downsize, sell off their property, downsize maybe into a 2-bedroom or a condo as the condos became more popular. What are you seeing today? What's happening? Are they still doing that for the most part?
Well, it's interesting because what COVID has done is it's scared these older individuals into going into retirement residence because of all the issues that have taken place in these assisted living centers. So we're seeing an uptick in reverse mortgages. People are staying in their homes, considering reverse mortgages. They could stay where they are. Maybe they bring in a caregiver into the home, and they adjust their living space to something that works for them. Maybe doing little renovations to bathrooms, adding stair climbers and whatnot. But it's definitely changed the dynamics of how the next move, or I hate to say it, the last move is taking place. So I'll let George talk about how mom and dad are helping out their kids, because you're seeing that a lot as well.
Yeah. That's an amazing point, though.
It is
about
a very good
The fear. There's a fear of going into retirement.
Oh my God!
Nobody trusts them.
My mother said to me the other day, "I loved you your whole life. Do not put me in a home." Like that's absolutely the worst thing I could do to my mother.
Well, there's an old Italian saying, and I used to always hear it being told to me by my mom, who passed away, but she would always say, a mother could raise 100 kids, but 100 kids can't raise a mother.
Yeah, I know.
Right?
Absolutely.
So don't put me in a home.
Yeah.
Right.
I want to stay in my house, and my dad's still on his own in his own home.
And that's how they grew up, right?
Exactly.
That's how they were raised. It was multi-generational, and potentially in a household, taking care of the elders as well. And we seem to have gotten away from that with these retirement homes.
It's going to be interesting to see how they survive and how they adapt, and how they appease people's concerns about care and being clean and COVID-free or disease-free. It's going to be an interesting dynamic for sure.
Well, I just heard, and to your point, I just heard this weekend a story of someone where their elderly parent does not want to go into a home. They will stay in their property, and they will have 24-hour care. So they actually have set up 3 shifts of people that will come in and work 8 hours around the clock to make sure that they're okay.
It'll be the norm.
Taken care of.
Yeah. It's a new norm. And in extended family, you would bring in your extended family to live together in your own home, right? So, you know, it doesn't surprise me, because when you look at the actual cost of seniors living, it's like $5,000 to $10,000 a month.
It's not cheap.
It's not cheap.
Right.
So you can bring in caregivers. So that definitely could be the norm in the future, right? You know, back to this about, you know, the traditional view is that a lot of people will downsize when they gotten a little older. And, you know, the more and more people I talk to now, they're looking at their home. Like, a lot of people look at their wealth, and 90% of people's wealth is in their home. Very few people have $1 million sitting in a bank account.
No.
They all have it in their home. And then they're taught to actually downsize and go into something that's not going. So maybe a home in Toronto appreciates 10%, but you downsize to a home that makes 2%. And the way I kind of look at it, why am I downsizing my asset from a 10% earnings to a 2% asset? Because people have taught me to do that. And I think that attitude is now changing. Well, why don't I just do a reverse mortgage or add a HELOC to access the equity, and I still have the house performing, and I can pass that to my kids and from generation.
And we're seeing more of that.
We're seeing more of that.
Like the reverse mortgage is a phenomenon that I think is going to balloon. And I think you're going to see more than just 2 lenders in the near future offering this product, because it's going to be a financial planning tool for families.
Yeah, it is.
I believe so too, and that you know, that lends an entire dynamic to the market as well. But you know, the whole thought of downsizing, from what you guys have seen out there in the growth of prices, has that made it more difficult to downsize? Because if someone's selling at, you know, 800,000, where are they going to go to actually downsize and
Reaza,
put money in the bank?
Not only that, but if these people are hanging on to their product, their homes, that doesn't hit the market as a new supply tool, right? So you now have this influx of people that are saying, well, I'm not going to sell, I'm going to stay. We got a product called the reverse mortgage that allows me to stay here as long as I want. All of a sudden, supply takes another hit.
Yes.
That influx of new properties coming in for the next buyer, the next phase, or that market, it's not there. So it puts more strain on supply demand, and it propels costs to the heights that we're seeing. It's going to drive the market up because there's not enough supply.
You know, piggybacking on that point, like prior to COVID, you know, I would say that the market was extremely hot and anything below 1.2 million.
Yes.
And anything over 1.2, it was slower. And now, maybe that's one of the reasons why, because I have clients looking for $3 million homes, and I know that less than 5% of our population can afford a $3 million home, and he's in bidding wars. Today.
They're bidding wars.
I'm talking right today. Bidding wars on, so the higher end homes, there's bidding wars in it. I think you mentioned that to me before too. Like the higher end homes, even though the affordability in terms of the percentage of Canadians can afford that is low, there are bidding wars at homes in the $2 to $3 million range.
Wow.
We're seeing it all over the city.
Yeah.
Wow. Right. So let's talk about something that's very interesting, the rental market blues. we've seen rents go in some cases from $2,500 or $3,000 down to $2,000, $1,800. What's happening? Like, what's going on in this market?
Well, talking to a lot of landlords that have been in the game for a while, they do believe that it was a good run, and things are normalizing. You know, the Toronto marketplace had a lot of nomadic tenants. With 600,000 foreign students in Canada, you have immigration, you have Airbnb. You had a lot of landlords that benefited from being able to reset their rents every year because tenants weren't staying in these units for long periods of time.
Right.
So the rents were getting inflated at a rate that was, it couldn't continue. It was something that had to come to an end, and it did. And we talked about it earlier. We've come into a bit of a lull, a reset, but I still think they're pretty healthy rents when you compare it to what someone's getting in a savings account.
Yeah.
Oh, yes.
Right? So, you got a $500,000 condo, you maybe get $2,000 a month, that's $24,000. That's better than zero, half a point in the bank account.
Yes.
So,
exactly.
it's all relative, but it wasn't as good as it was, but I think people really did well in that little run-up because of the nomadic tenants. And you know the space very well. You do a lot of wealth planning with rentals.
Yeah. So I think, a lot of the people living in these condos are very young kids, right? And I used to ask them a lot, how can you afford $1,500 with a roommate paying $3,000 a month? And they justified it like this. So a typical guy that maybe lives in Oakville. So they tell me, well, George, I need to pay my mother $500 a month. My parents aren't letting me live there for free. I got to get a car. It costs me $300 a month. The car insurance is $300 a month. And my GO train pass is $300 a month. And when I add that up, it's $1,300. So I got to rent downtown for $1,200 to $1,500 a month, and I didn't have to wake up until half an hour before I went to work. When I live in Oakville, I got to wake up at 6:30 to get to work for 8. So the convenience factor is there, and it's justifiable based on the other cost of living at home. So for $200, they get all that. That's not going away.
And they got to live under mom and dad's rules.
And
yeah, and they got to live under mom and dad's rule. They have curfews. They get in trouble. So that's what the kids want. Back to this rental income. Again, I'm about fundamentals. Everything, I have fundamental relationships between everything I do in my life. And the one fundamental relationship that I believe in is that as home prices go up, rents go up. They're positively correlated. They're not negatively correlated. And when I see prices going up now and rents going the other way, that's a short-term blip to me. I honestly believe it. You can't have decreasing rates, rentals, with increasing property prices. Do I think that relationship, I mentioned it before, it's coming back. And it's going to come back in a big time. I would not be surprised the minute the banks and the large corporations in the downtown core turn on the tap and said, people are going back to work. What are you going to predict? I'll predict it. Rental wars. I predict it.
when you say rental wars,
People, one condo available, two people want it. That's a rental war.
okay.
And that, I'm not saying it's going to go higher than it was before, but I do believe rents are going to go very, very close to where they were in the heyday pre-COVID. So that's an interesting view, but I really see it.
I like I said, the government will turn on the taps to immigration.
Yes.
One stat I heard recently was that immigrants have a higher propensity to be a homeowner than native Canadians by 25%.
Absolutely.
So we do know that there's a correlation between immigration and home buying. So once that tap gets turned on again, and we try to attack that $300,000 number, 300,000 number cap that the government wants to bring in every year, it's going to drive activity, and 2/3 of them land in GTA, which is positive news for us.
There was an article I saw last week. It was from the Greater Toronto Apartment. It's a condo corporation that manages all the apartments in the GTA. And they came out with a stat saying, is it true that the demand for rentals is going to drop? Because that's what's happening. And they made a prediction. There's going to be a shortage of 200,000 rentals in the next 10 years in the GTA. That's their prediction. 200,000 shortage of rentals.
And that's based on the immigration coming back.
Migration
in general.
You got to remember, when immigrants are coming to Canada, it's not easy anymore. Before it used to be a free ticket to welfare. Now you got to have money, or you got to have professional
Skills.
designations.
Right.
And when they come here, they get stuck in Timbuktu. You're a doctor, you don't get to choose to work in Toronto. You're somewhere way up north.
Yep.
But after 2 years, you are free to move anywhere in Canada you want. They want the money. Guess where they're coming?
to the big city.
That's what's happening.
One thing that we haven't touched on, and it just came to mind, is, COVID has impacted the service industry.
Very
Dramatically.
Entertainment, service, restaurant businesses, any entertainment-based business. And those are probably the lower end income earners that rent.
Your part-timers,
Yeah.
There's been an increased shift of some of them moving back in with their parents because of job loss and whatnot.
Yeah.
So there's also that element. Once COVID normalizes, we get back to a new normal, you're going to start seeing those people wanting to move back into these units, and to your point, are going to probably drive some of these unit prices up again.
Yeah.
So there are two things that I want to bring up, and the first thing will be then, if we're talking about rentals and coming back to where it was and everything else, where do you guys see the impact of the Airbnb factor? Because they're saying that really ruined things.
Well, I think tourism's the driver there. If people aren't visiting the city, and I just don't see how that rebounds until travel not only opens up, but people are comfortable again. That might have to come into the discussion about vaccines and how effective are vaccines, because as much as travel could open up, I still speak to a lot of people that aren't comfortable going anywhere.
I agree. Yeah.
So I think that's going to be tied to a vaccine that's effective, and every doctor I've spoken to that I know has said a vaccine's only 65-70% effective. So there's still going to be that element of
it's going to be there.
It's going to be there. So the new norm is what has to be set, and what are people going to be comfortable with. I think there's going to be a lot of domestic travel. I think Canada has a great opportunity to showcase its gems across this beautiful country, and you're going to see people traveling within our borders as opposed to going south.
Yeah, I've seen a lot of that, even amongst the group that we know. They're either heading out west primarily, because east,
Still has the bubble.
East, they still have the bubble. You have to quarantine for 14 days. But even within the province, people are taking 3-hour drives just to see different parts of the province as well. And they're very happy about that.
I'm going to predict snowshoeing is going to see an increase in activity this year. People are going to be taking up a lot of these winter sports, because I don't know what they're going to do this winter if they can't go anywhere. So it'll be interesting to see what happens.
Well, look what happened on the golf course this year. Because people had nothing to do, golf was one of the only sports that was available outdoor. What happened on the golf courses, maybe not at your course, but every course across Canada?
We had a record number of rounds.
Yes.
The U.S. had 10 million net new golfers to the sport.
That's what happened.
That was announced during the U.S. Open, and I can only imagine that it's the same here.
The average round that used to be 4 hours is now 5 hours again because of the beginners.
It is.
It's crazy.
My first round, we went out, it was 2 of us. And we're like, no problem, we'll be done in 3.5 hours.
No way.
It was 5 hours later.
Yeah,
it was
5 hours.
crazy.
You just got to hit it straighter, Reaza.
That is a big part of it. It's like, when you have to go look for your ball.
It adds time.
That definitely adds some time.
I played around with Vince this year and it wasn't too good, so don't bring that one up.
That definitely adds some time. Okay, last question on this topic. CMHC. I know that I'm throwing you guys a curveball because we didn't talk about this, but CMHC and their mandate and housing Canadians. I mean, they're taking mortgages out of that, and that's ultimately their goal. But the focus now going back to purpose-built rental buildings, if you will, and making sure there's affordable housing. Do you guys have any thoughts on that? George?
So the question, because there was so much...
CMHC.
Right.
And their focus, refocusing back on affordable housing for Canadians, right? And housing Canadians. They're taking the word mortgage out of there, ultimately.
Well, I think, if those of you who remember, CMHC came up with a rule not too long ago trying to make it a little more difficult for first-time home buyers. And that to me, I wasn't, because I didn't like that, because, what's made Canada such a great country is that they made housing affordable for people. They brought housing to people, and people have always been able to build equity and survive through our credit crisis. I saw it. We recovered faster than any country. So I didn't like the fact that they were actually making it more difficult for first-time home buyers, right? Okay. For affordable housing, there's no doubt COVID has caused a lot of people to become even poor. Like I would argue, the one thing that, there's a lot of things that you gain from COVID, but there's one thing that I can always say that I believe in is that the rich have gotten richer and the middle class and poor have gotten poorer. I don't know how that happens, but I think that's pretty normal.
I will say it's a pipe dream.
Okay.
Because in order for that to come to fruition, the federal government needs cooperation from all levels of government, provincial and municipal. A condo developer in the city of Toronto, from the time they purchase the land to the time they close, takes almost 10 years.
Yep.
Yes.
The amount of red tape and service costs associated with the build of that condo before they spend money on materials is almost $140,000 a unit. People wonder why are these condos expensive? It's because the red tape at the municipal and provincial level are absolutely ridiculous. So building affordable housing can't happen unless you have every level of government involved, willing to change the way they do things. And now with a green energy type mandate,
more expensive.
that costs more money.
Yeah.
So what's affordable? That has to be determined. Is it containers that are converted into homes, which we're seeing?
We are
seeing different types of homes. Micro units, is that going to be a home? We may very well see a hotel room be a home with a communal cafeteria. Is that going to be an affordable home? So I'm not sure how that's going to be defined. And until you define it, I don't know how you can attack a problem. Because you're going to have to reestablish what a home is if you want to make it affordable.
And if they're talking more purpose-built rental buildings, I can't remember when apartment buildings were built. I'm not that old, unfortunately, but fortunately. But when you think about
Reaza,
it,
I have a colleague who wanted to renovate an existing building. Okay. It was a 100-year-old plus building, and he had a battle with tenants about the size of the unit that was being replaced. Because he had to conform with new fire code regulations, new provincial guidelines for 2 exits in a unit, these units went from about 1,000 square feet down to 850 because of all the additional safety measures he had to take into place. And these tenants were fighting that they weren't getting the same size unit, but he couldn't.
He couldn't.
He couldn't. He had to have wider hallways. He had to have 2 exits. He had to have handicapped this. It's impossible. And how are people going to be incented to build these type of units when the regulatory requirements are such that prevents you from doing it? It's impossible.
Yeah, and that's why I say you have to have builders on side with this.
Builders. You need the government on side to give them some leverage.
Well. Yes.
Right? Because I'm not going to invest money if I can't make a return, a reasonable return. So it'll be interesting.
Wow. Wow. So, we touched on consumer indebtedness. We talked about that earlier in the conversation as well. And I thought, let's end off with something fun, okay? We're all sports fans here, whether it be baseball, basketball. Basketball just finished. Baseball's in the playoffs right now. What are we all going to do come the winter time and there are no sports on? There's no hockey. There's golf, maybe?
Well, what's been interesting is, the sports is a mecca for gamblers.
Yes.
Right? And without any sports during COVID, a lot of people invest in the stock market. And we've had this conversation about how overheated the stock market is.
It did get that
So
way.
that could be a new pastime for people is, riding these hot stocks and and trying to make up for the lack of gambling opportunities in sports. But it's going to be interesting. The dynamics in the family unit are changing. I think more people are spending time with family, which is good. I'm hearing more people going on hikes, going on little drives, and breathe some fresh air to just get out. So hopefully, with sports coming back in January, I believe, with hockey and some other sports, I think there's going to be some dry time.
I think Vince is going to take up snowshoeing.
I might have to do something like that.
And George, you're going to be doing snowmobiling.
We'll see. That question you said, even though it's a little element of something casual conversation, I think, as we head into the winter, I feel a little stressed out. Not only for me, but not necessarily for me, for my parents and stuff.
The isolation.
And they feel like, I'm 84. What the heck am I locked up in my place for? But back to your thing about sports, I tell you, the sports, even though I'm a fanatic sports fan, it was the best distraction when the Raptors are in the playoffs. It was something I looked forward every single night. I look forward to the Leafs, but they always lose as always. But sports to a lot of people, and not only sports, we have been looking since the pandemic started for distractions. And with no sports, the distractions are not going to be there. And it's going to be, I think it's going to be a winter where we better listen to our family and people calling out, because the kids are going crazy. Online school is not the same.
It's not easy.
It's not easy for me. We got to spend time to talk to them, because I've noticed that even the kids in my house, they're starting to isolate themselves into a bedroom, and they stay there the whole day, and they're okay with it. And it's worrisome. It's not normal, and we got to find ways to really
to get them out,
interact and get people out, right? And sports was a good way to get the kids out. It was a great way to, even though I complained about driving the kids around to sports, it's something to do.
And it was a great way to spend time with them as well.
We're social animals.
We're social animals.
The social aspect of sports or just getting out with a gathering, being restrictive and not being able to do that is problematic for a lot of people.
So you shared with your younger child, sports is one thing, but music is another thing, right? But people love going to concerts or getting together with their friends and playing their music.
My youngest loves music. He creates his own music. He plays a number of different instruments, and taking away the music class and his ability to get into his band at school and play is tough. It's tough for them, and COVID's restricted them from doing that. Hopefully we get to that soon, because these kids and all of us, we have to interact with other people.
Well, and that's what I was going to say. For any of us, we work hard. They work hard at school. Everyone needs an outlet.
Yes.
Whether that be sports, music, or anything that they enjoy doing, art. You need that outlet to reset your mind. Before you dive right back in as well, right?
Yeah.
But, well, listen, with that, I want to wrap it up. George, I want to thank you.
I still need an update on Snarky
Oh, you know
Market,
what? That's true. It's been 3 months.
Because Vince, I want to hear, Vince
you're right.
He's now on the way to becoming an influencer.
For those that did not see this 3 months ago, we found out some interesting things about Vince here and his social media presence, and more so through his son.
I've learned the
Marky.
power of social media.
Yes.
Can move fast and can have a major impact in somebody's life quite quickly. Mark is now at Snarky Marky.
Snarky Marky
is now at
3 months
university.
Later. Yeah.
Started at Western University, and he's up to 4 million followers on TikTok. Wow. He's branched out into Instagram. I think he's got over 125,000 followers there. He's got Twitter, another 80,000, and he started a YouTube channel. He's got another 60 some odd thousand followers or subscribers. He's having a lot of fun. He got showcased on Paper Magazine. They did a feature on him, and he's got some interesting things in the works. Having a lot of fun.
Good.
And that's one thing we talked about. We don't know how long this is going to last, so enjoy it, have fun, use it as a way to engage people, help people out. We talked a little bit about the social aspect, the isolation, and the mental health aspect. He's trying to keep people laughing. Yeah. And if he could put a couple smiles on people's faces and make their life a little bit happier for a moment, I think it's good work. Yeah. But I told him stay in school.
I was going to say, and I hope the schooling is going really well.
He's having fun. He's having fun, and he's doing a great job. And you know what? We're really proud of him.
Oh, that's awesome. That's awesome. George?
Well, you know, life is good. I've started a health kick. I realize that, you know, your body's got to be able to move to enjoy life. Right?
Yes.
So I started that, and
so you're a little bit more flexible now.
Yep. I've started a new journey, and I'll tell you, the first couple of days into the gym was very embarrassing when the guy said, "Can you touch your toes?" And I said, "I can barely touch my knees." You know, so but it's wonderful. So it's a new thing that I'm on.
So you're doing some yoga and you got the one-piece outfit on? Is that
the Speedos. I got, you know, when I wear my Speedos into the gym and everyone's going,
"What's going on?"
Looking at me funny. No, but I'm enjoying it, and I love having you guys here. It brightens up my day, changes my day.
That was a lot of fun.
That was fantastic.
And, Thanks again, and we're planning for our next one again already.
Absolutely. We'll do another
Maybe at
update.
the Monster. We're going to do it at the Monster Mortgage.
Yeah, we'll change it up. Let's have some fun.
We'll do an update dead of winter, and we'll figure out what things we've all picked up at that point.
The snowshoeing. I want to hear about the snowshoeing.
It'll be fun.
Thank you.
Thanks.